Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, guys, things are about to get exciting. As I've said before, this could be the hairiest fourth quarter in our recent history. So let's start with what the powers that be want us to think. Here's the narrative. The chance of another jumbo-sized U.S. interest rate cut in November diminished this week, with data showing the job market remains resilient and the economy slowing as desired by the Fed Reserve isn't at risk of stalling. Job growth last month topped all estimates. The unemployment rate declined and wage growth accelerated. Sounds like a campaign speech, right? Fed Chair Jay Powell this week reaffirmed that shielding the job market was part of the reason why the Fed decided to kick off its easing cycle with a larger rate cut. The data is a welcome development for Powell and his colleagues, who apparently seek no further cooling of the job market. Now, we got an election coming up. The figures also support hopes for a soft landing as the Fed tries to stamp out the last vestiges of inflation. But the new numbers are also a reminder that inflation is not dead, according to Mohamed El-Erian, the bond king. Policymakers and the Biden administration, and by extension, Vice President Kamala Harris, got even more good news when East Coast and Gulf dock workers agreed to end a 3-day strike that threatened to paralyze trade. Okay, so everything is going the way the Fed and the current administration want so far. A resilient job market, wage growth accelerated, the economy is slowing but not stalling, and the port strike is now off the table. Now they want us to believe inflation is behind us, but that's why this coming week is so critical. Now, guys, try to remember why I do these events calendars. You can get this information anywhere, but I plot things out because a lot of my subscribers are still trapped in AMC, and I concluded months ago with Adam Aron coordinating with Wall Street and the regulators determined to protect Wall Street. The only way out may be a black or white swan event, something unexpected that adversely impacts our enemies, something that attacks the leverage chain of our enemies who are currently leveraged 60 to 1 or even higher, something that turns the prime brokers against their best customers, the predatory short hedge funds. For example, what if Israel attacks Iran on the 10th when we get CPI and we get a hot reading on inflation? We could see the start of another 2008 style crisis. You never know. For those of you that weren't there, nearly 700 hedge funds closed. 7% of the industry shut down in the first 3 quarters of 2008. So don't tell me I don't know what I'm talking about. I was there, and I feel we're in worse shape now than we were in 2008. So what's next? The port strike is out of the way, but when will Israel attack Iran? And will that drag other nations like the U.S., Turkey, into the mix? What will that do to oil prices and inflation data? We have to be ready for anything. If war breaks out in the Middle East, will China take advantage and attack Taiwan? Is the Biden administration going to let Ukraine hit targets deep within Russia? What do you think Putin is going to do in response? I do these calendars so you know what's going on and what's directly ahead when a swan finally lands. At the time of this recording, there is no Fed meeting scheduled for October, so we may have to wait until November for the next rate decision, and it currently looks like we ain't getting another cut in November. The first thing I want you to know about the week of October 7th is they have a Fed Reserve member scheduled to speak every friggin' day. 16 presentations altogether. That's why you watch this show, by the way, so you know when someone is trying to get into your pants, boys and girls. Wednesday, October 9th, 2 p.m., minutes of the Fed September FOMC meeting get released. Thursday, October 10th, 8:30 a.m. Initial jobless claims, but more important, CPI. This week, the whole shift goes back to inflation. Friday, October 11th, Producer Price Index and Consumer Sentiment. Monday, October 14th, is the Columbus Day holiday. The U.S. bond market will be closed, but the stock market will be open for business, baby. October 15th and 16th is Ripple's Swell Conference in Miami. October 22nd to 24th is the annual BRICS Summit in Russia. Did you notice the Ripple Conference is exactly 1 week before the BRICS Conference? And now that XRP has been deemed not a security, they may release some explosive shit ahead of the BRICS Conference. And now the SEC has filed an appeal. Please understand, we could get some earth-shattering and market-roiling headlines out of this BRICS Conference. And right before the election, right? What if Ukraine attacks Russia while the BRICS Conference is going on? This could profoundly affect crypto, precious metals, the U.S. bond and stock markets, not to mention the U.S. dollar. Heads up, everybody. Thursday, October 17th, 8:30 a.m., initial jobless claims and U.S. retail sales. I expect Bill Wang of Archegos to be sentenced on Monday, October 20th. Do you think that has nothing to do with you? Then tell me why they delayed the Andrew Leff trial until September 30th of next year. Did you really think they want all that dirty hedge fund shit coming out just before the election? Or maybe Andrew Leff realized he's going to die in jail like Bernie Madoff unless he starts singing like Ariana Grande. Guys, one thing you should definitely watch in the middle of all these distractions is earnings on Friday the 11th. JP Morgan Chase, Wells Fargo, BlackRock, Bank of New York Mellon, not just the results, but forward-looking comments could set the tone when the market reopens on Monday, the Columbus Day holiday, with the bond market closed for the occasion. And yes, November and December already look like a haunted house for stocks, bonds, oil, precious metals, and crypto. In November, I expect 3Q earnings releases from AMC, Archer, and Joby, and the November 5th election is now only 31 days away. We won't have an October FOMC meeting, so the meetings scheduled for the days immediately following the election, the 6th and 7th, are already getting amped up. Guys, on a side note, do you really think our enemies aren't planning some interesting shit for us? Do you think they don't know when our events are scheduled and that our pants are down? Think about it. Not to mention, the Democrats we have in power now are not the Democrats from 25 years ago. Do you really think they're going to give up power without a fight? Expect a shit show. That's all I'm going to say. I don't want to trigger any of you out there who think Kamala is a logical choice to lead our nation. What if Biden resigns in October and swears in Kamala so she can run as an incumbent? I bet Hunter Biden gets pardoned then. He's expected to be sentenced on November 13th. I also believe the immediate future of crypto could swing on this election. Trump has promised to dump Gensler on day one in office, but that's not until January 20th of 2025. That's 107 days away. What is Darth Gensler capable of until he's thrown out into the street, or worse, what will he do if Kamala wins? GameStop's next earnings date is unconfirmed for December, but typically happens after market hours. The big question is, will Ryan Cohen drop his future plans for the company before or after the election? My guess is after, which would make the fourth quarter earnings call for GME, in a word, explosive. By the way, December 17th and 18th will be the last FOMC meeting of the year, and that very same week, Friday the 20th, will be this year's last quadruple witching day. Even that week has the potential to blow a hole in your 401k. So buckle up, buttercups. You wanted to see some action? I say it's finally coming. Okay, gold bugs, your time may have finally arrived. 7 Wall Street giants, including JP Morgan Chase and B of A, believe one asset is primed to rally in the year ahead. The big banks collectively see gold moving to new all-time highs through 2025 amid expectations of more interest rate cuts from the Fed and more central bank accumulation around the globe, reports Reuters. The firms also say rallies for the precious metal will be buoyed by retail investors piling into gold exchange traded funds or ETFs. Say JP Morgan analysts in an investor note, quote, strong physical demand from China and central banks supported gold prices over the past 2 years. But investor flow and retail-focused ETF builds in particular continue to hold the key to a further sustained rally over the upcoming Fed cutting cycle. Meanwhile, investment banking giant Goldman Sachs expects more investors will turn to gold in the coming months to shield their capital against potential macroeconomic headwinds. Goldman analysts say an increase in investors getting gold exposure through ETFs, along with the Fed's rate-cutting cycle, could account for 33% of the precious metal's expected price jump. The remaining 67% of the projected price rally could come from central banks continuing to buy the precious metal. Quote, we reiterate our long gold recommendation due to the gradual boost from lower global interest rates, structurally higher central bank demand, and gold's hedging benefits against geopolitical, financial, and recessionary risks. Goldman expects gold to climb to $2,900 early next year, with a price target of $2,973 by the end of 2025. Other Wall Street giants say it is within the realm of possibility for gold to surge to as high as $3,000 next year. Guys, that's exactly what we study on this channel, macroeconomic headwinds. I follow some guys that monitor whale movement in the markets, but I study what moves the whales. My personal take, I agree. I'm bullish on precious metals, but watch for hard pullbacks when you don't get the interest rate cuts when you want them. But what about us silver bugs, Uncle Frank? You guys should be excited. From 3 days ago, silver price forecast XAG/USD rises to near 31.50 due to rising geopolitical tensions. And from yesterday, silver miners struggle to keep up with demand. And from Reuters, Coeur Mining to buy Silvercrest for $1.7 billion in bets on silver boom. And from Kitco, it would be shocking if silver didn't break all-time highs. And again from Kitco, how war between Israel and Iran could impact gold and silver prices. Listen, guys, always remember that silver is the most hated precious metal by the big banks. These guys send their own traders to jail nearly every year to keep this metal under control. Be watching for dips due to this final headline here. Silver forecast: will rate cut uncertainty push silver prices lower? Other than that, I hope you guys go to 100. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. This channel is for entertainment purposes only. So, Uncle Frank, where do you think we are on AMC? Dead money, as I've said in every video that I've covered it on for the past year now. That's the weekly chart on your screen. I put an arrow where the ape came out. That was a rescue mission for Wall Street. I told you before it was released, it was planned by short sellers of AMC, mainly Citi, for the benefit of short sellers of AMC in our very own boardroom. It was nothing more than a preferred share convertible into 1 share of common. Adam gave them away as a dividend for free instead of pricing them and selling them like a typical preferred share offering, where we would have raised a lot of money. They were never designed to raise money. They were used to secure the outcome of a shareholder vote, in my opinion, but more importantly, the shorts desperately needed them to convert from a like security to a real locate, and that's exactly what happened. How did he get support for it? It's in the board minutes as clear as day. Just read them for yourself. He knew many shareholders believed the dividend distribution would act like a share count and would expose the shorts and force them to cover. He used clever little hashtags in his tweets to make us believe he was on our side, like "today we pounce" and "choke on that." We essentially transferred all our power to Adam, and every time the stock picked up its head ever since, he would clobber it with a round of dilution. But that's the past. Now I will outline what can happen going forward. I think we had a great third quarter, even better than last year's third quarter, which was the best third quarter in our entire history. But Adam killed that potential rally before it had a chance to begin. What I don't know is if Adam will kill the potential rally ahead on what could be another record third quarter. How can he do it? Simple. He can dilute again, or he could give a negative forward outlook for Q4. Now, here's what the analysts say about Q4. Analysts predict that the box office revenue for the fourth quarter of 2024 will be nearly $2.9 billion, which is similar to pre-pandemic levels. The fourth quarter of 2024 is from October 1st to December 31st. Some of the films that are expected to be released during the fourth quarter include Gladiator 2, Joker 2, The Lord of the Rings, Moana 2, Mufasa, Venom, and Wicked. Disney will also be releasing films during this quarter, including Mufasa, The Lion King, and Moana 2, which will be important for the studio to show that they can still create big draws. Now, the other thing that could happen is Ryan Cohen could make a surprise announcement about GME's future, and AMC could chase it up the way it did last time. But if that rally gets out of control, maybe we could see a squeeze. You never know. I would consider that a white swan. One thing is certain. If Adam isn't ready for the stock to advance, he will dilute again. And I'm sure the Limit Up, Limit Down committee will not forget to halt the stock over and over again until it stops the rally and gets the stock back under control. I still think the stock's best chance is a swan event that attacks the liquidity levels of the bad actors, forcing the primes to rearrange their portfolios or go down with the ship like Credit Suisse. You may know this phenomenon as a margin call. Did you guys know AMC has a snack going viral right now? Apparently a hybrid combo of pepperoni pizza, cheesy nachos, and jalapenos has went viral. It's an off-menu special at AMC. Go check out that 10-second video on TikTok. It looks like NerdWallet reviewed the AMC credit card this past week. 5 things to know about the AMC credit card. If NerdWallet had a tomato meter, we'd give this card a green splat. From the article, the AMC Visa card issued by Celtic Bank is presented with all the hype of a classic summer blockbuster. The points are explosive. The rewards are out of this world. It even comes with a limited edition NFT. But behind all the special effects of credit card marketing, the AMC credit card is more akin to a campy, low-budget horror flick made only for a niche audience. Unless you're a die-hard moviegoer with a well-used AMC Stubs membership, you're better off taking a general-purpose rewards credit card on your next movie date. Here's some of her criticisms. Only members can apply. You must be a member of AMC's loyalty program, Stubs, to apply for the card. Points aren't worth much and redemptions are limited. At first glance, that sounds like a lot of points, but take a closer look behind the Hollywood facade and you'll quickly realize those points aren't worth very much. Cardholders get a $5 reward for every 5,000 points earned, meaning each point is worth a measly 1/10 of a cent. That's far below the industry standard value of a full penny per point. The bonus isn't a blockbuster. New AMC Visa cardholders do enjoy a small welcome bonus. Customers who spend at least $50 on the card during the first 3 months get an extra $50 in AMC Stubs bonus bucks. But once again, unless you're a Premier or A-list AMC Stubs member, those rewards can only be used on concessions, and the bonus bucks expire 90 days after issuance. Guys, I have to say, I think our rewards program is the best in the industry, but we don't market it properly. Instead, we pay $25 million for a commercial that only plays in the theaters. We debut our popcorn line in only one store. We spend $250 million on green projectors when we were over $5 billion in debt. We invest in bankrupt gold mines. Let's face it, we have a shitty CEO that doubled his pay plan the year of the pandemic. What a shame to waste the most loyal shareholder base of all time on a piece of shit like Adam Aron. Who wants to protest at the next shareholder meeting in Kansas? We could all bring signs that read, "Fire the fat con man pervert CEO." Now let's talk about my favorite income play, GUT, or the Gabelli Utility Trust. That's the weekly chart on your screen going back 5 years. Months ago, I mentioned I like to buy GUT under 6. That's the middle line in red, with extra money in my account, because when it's under 6 currently, it pays a 10% dividend yield and it pays monthly instead of quarterly. I also mentioned GUT trades at a huge premium over its net asset value, or NAV, but it always has done that. I mentioned I like this utility trust as opposed to bond funds or REITs, to each his own. Now, my personal plan for this stock is I will never sell it. It will pay me every month until I die. And when it's down, I'm reinvesting into higher yields every month. Theoretically, I'm giving myself a little raise every month until I begin to live off the dividends. And yes, there's always a chance they can cut your dividend, but GUT has never done that since it was founded in October of 1999. I put a red arrow in to show you that when the market crashes, utilities can crash too. But for my purposes, I don't care. Now, at the current price of $5.09, GUT pays a forward yield of 11.64%. Based on the chart, I wouldn't consider selling GUT under $6.50. That's the top line in orange. And I think in a downturn like it's in now, I'll be watching the $5 level. That's the bottom line in green. Now, recently, a rights offering was announced. I can't give you investment advice, but I can share the comments of the Stanford chemist. The Gabelli Utility Trust 1-for-5 rights offering allows shareholders to buy additional shares at $5 each, expiring October 21st of 2024. GUT trades at a 72.52% premium to NAV, making the rights valuable unless the share price drops below $5 before expiration. The rights offering is accretive, boosting GUT's NAV and supporting its high distribution rate, benefiting long-term shareholders. That's me. So now let's review the potential swan list, starting with the most pressing one, which I believe is geopolitical, the conflict between Israel with Hamas and Hezbollah. I say that because now that Iran has attacked Israel, there will certainly be a response, and that could easily involve the United States if things get out of hand. Of course, we still have the conflict between Russia and Ukraine, the potential one between China and Taiwan. North Korea is always a wild card, and the 2024 election itself could easily become a swan event. Now, under systemic and/or financial, we have the $1.14 trillion U.S. credit card debt crisis. the $4.7 trillion commercial real estate debt crisis, unrealized losses at U.S. banks, which stands at $517 billion after the first quarter, and even the Fed Reserve has unrealized losses reportedly of $1 trillion. Nearly 300 U.S. banks are considered to be at a higher risk of failure. We have the de-dollarization trend stemming from the BRICS, right? A $35 trillion U.S. debt spiral, and let's not forget the $200 trillion derivative tsunami out there. Ryan Cohen could make a surprise announcement about the future of GME, or maybe we'll get another Roaring Kitty tweet. The SEC has appealed in the Ripple case, but we could also see the approval of the Ripple stablecoin, RLUSD, and maybe even an XRP ETF on the horizon. Elon Musk could debut his new payment platform on X. We could get more rate cuts from the Fed, or they may even be delayed. And then there's the hidden hedge fund over leverage, meaning securities sold yet not purchased, or potentially billions of unreconciled synthetic shares out there. Let me know if I missed any. So is anyone else concerned about this particular combination of headlines? From 2 days ago, what we know about Iran's missile attack on Israel. Iran launched almost 200 ballistic missiles towards Israel on Tuesday night. The Israeli military said most of the missiles were intercepted, but that a small number struck central and southern Israel. The only person reported to have been killed was a Palestinian man in the occupied West Bank. It was Iran's second such attack on Israel this year, after it launched about 300 missiles and drones in April. Dow closes at record high after blowout jobs report. Stocks advanced on Friday after an expectation-defying jobs report gave investors confidence about the health of the economy. Okay, so the Dow is in record territory, and the Iranians just launched a second attack on Israel. And now Iran is listing conditions for a ceasefire. Listen, guys, at this point, I think the Israeli response isn't if there will be one, but when. The big question is, to what degree will the U.S. be involved? So now I want to talk about my number one pick, Archer Aviation. Let me give you some reasons I'm so excited about this one. Even if the stock market crashes, even if the economy crashes, this is one of those projects that politicians on both sides will get behind in a recovery phase. It creates jobs. There could be 1,000 jobs created by Archer at the Covington, Georgia plant alone. Low noise pollution, low emissions. This story has it all. The fun part about this one is barely anyone knows about it. The short sellers are ignoring that this startup company has a $6 billion order book almost overnight. They've got strategic alliances with United Airlines, Southwest Air, Future Flight Global, Stellantis, and they've already made their first delivery to the United States Air Force. But what about when these things are actually in the air over Los Angeles? What about when celebrities start using them and taking selfies in them? What if this service becomes an adverb like Google or Uber? In other words, what's going to happen to the stock if people begin to say, I'm going to Archer to Napa Valley, or I'm going to take a midnight to the airport instead of driving and parking my car? That is a short seller's nightmare if I've ever heard one. The bottom line is this is a new thing, a new industry. They're going to be everywhere. It's going to happen, and people are going to start to take notice. Do you want to know why automakers like Toyota and Stellantis are investing hundreds of millions of dollars in air taxis or EV tolls? Because this is going to happen, guys. These will be the affordable replacement for the light-duty helicopter. They will be used by the military. They will be used as flying ambulances. They'll be used by airports, hospitals, and stadiums. This isn't some little robot replacing someone's job. This is creating jobs by creating a new industry, not investment advice or advisor. So where are the fails to deliver happening? We know Gensler and the SEC don't track them carefully anymore. We've got to go to Fintel.io. I see them in Archer in September. There's the red arrow, big spike, right? On September 5th, 1,312,000 FTDs. And here are the FTDs on GameStop. Look at September 11th. 261,236. There's a spike. Morgan Stanley made adjustments to its U.S. all-cap growth portfolio on Friday, adding 2 stocks while removing 2 others. Specifically, the Wall Street firm added positions in DoorDash, symbol DASH, and GE Vernova, symbol GEV, citing growth potential and alignment with key themes while reducing exposure to Adobe and completely removing United Health Group. Uncle Frank is adding DoorDash to his watch list, and here's why. Morgan Stanley introduced DoorDash to its portfolio to gain exposure to the leading food delivery company in the U.S. According to the note, DoorDash's 3-sided network, which connects customers, merchants, and delivery contractors, positions it well for continued growth. With approximately 60% market share, DoorDash has emerged as the top player in the sector. So if there's a market crash, keep an eye on Dash. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.